Hi everyone, and welcome to a new episode of Crypto Tips talking about how to trade cryptocurrencies. My name is Heidi, and today we're going to talk about how to create a trading plan. There's a lot of people who have been successful and have been failures at trading cryptocurrencies, and having a good trading plan is probably playing a big difference between those two. So if you guys are ready, let's get into it. So if you guys are new to day trading, you'll find that there's a lot of information online about it, but there's a lot of lessons that can be learned from those who have failed at day trading. And those are the most important lessons. If you can learn it from other people, it'll save you a lot of money. But here's one good tip that I think is helpful, especially for those of you who have day traded before on the stock market or with Forex, and you found success using these specific trading plans. Please know that it is not universal and that you're not going to just apply the same trading plan to something as volatile or just different altogether as cryptocurrencies and expect perfect results. It's really important to test out your trading plan with paper trades ahead of time and see if you can get any good profit or any success whatsoever from that trading plan. And you might need to make some adjustments, but it's very important, especially if you're new to trading crypto and you're taking risks, you're making decisions you've never decided before, you're trading that you've never done before. Please practice with paper trades first. You write them down. You don't actually conduct them with your capital. You just act like you did the trade and see actually how that plays out in the long term. So what is a trading plan? It is what you decide ahead of time. It's usually a written document. Maybe writing it down helps solidify it in your soul to help imprint it on you when the time comes when you actually need to abide by the plan. It's going to dictate how and why you make trades, and also how and why, like when you're entering trades, and how and why you're exiting trades. When certain circumstances come up, how are you going to meet that difficulty? Let's say you're stuck in a trade, you're losing money. Are you going to cut ties and walk away? Are you going to wait and see how much money you can lose within that trade? Things like this. Anyway, I'm going to go into the specifics right now. All right, so I've got 10 aspects for you to take into consideration when making your trading plan. First one should be, what time of day are you going to be trading? What is your time frame? What other markets are active in that time frame? And just to try to encourage you to try to have as healthy of a lifestyle as possible, day trading requires you to be staring at a computer screen for as long as you're deciding to trade for. So please have a marked schedule and time frame for you to be engaging in day trading, and then when that time frame expires, step away from it, go do something healthy, spend some time outside, do something that makes you relaxed or something that you enjoy. I think this is going to help you just have a more better perspective on day trading. You won't be so sucked into the matrix. Day trading can wear on your mind, and that's going to help you have more mental sharpness, I believe, and you can come back to it refreshed and with a better perspective and less emotions, hopefully, and you can make better decisions in your trades. Point number 2, which coins are you trading? You're going to have to decide, what coins are you trading? Is it going to be Bitcoin and a stable coin? Are you going to go a little crazy and do a cryptocurrency against another cryptocurrency? This is going to be determined by your overall expertise in day trading and with cryptocurrencies in general. In my opinion, if you are a beginner, it's best probably to have that paired up with a stable coin like USDT, USDC, DAI. There's a lot of different ones out there, but probably it's going to determine on which exchange you are participating in, the volume for that trading pair. A lot of things are going to play into it, but at least when you're trading against a stable coin, you can limit the volatility to one side, that one coin. So basically the coin that you're entering into and exiting from, let's say you're going to buy Bitcoin with USDT, you are entering a trade, you're exposed to the price movements of Bitcoin. When you want to exit that trade into your stable coin, you are removing yourself from the volatility and price movements of Bitcoin. Point number 3, you're going to need to decide how frequently you're going to be trading during the day or during the allotted time for your trading window. Are you going to be doing really frequent trades really rapid time, or maybe you're going to try to make 1 or 2 trades a day. This is also going to determine your time frame when you're actually going into looking at the charts. Time frames is something I will be actually getting into in the very next video, so be sure that you have subscribed to this channel with a bell notification turned on so you can be notified when that video comes out. But anyway, you're going to need to determine, again, how frequently you're trading, so then you can kind of catch yourself wanting to make too many moves or making not enough moves to maybe be as advantageous as possible. Category number 4 for your trading plan. What are the indicators you're going to consider to either confirm or to bust the potential trade that you think is lining up for you to make that move to enter a trade or to exit a trade? You shouldn't be relying on one sole indicator. You should be relying on multiple different indicators that are confirming that either a trend reversal or it's still accumulation phase, or whatever you think you're seeing in the chart, what is backing that up, basically. Category number 5 for your trading plan: how much capital are you going to be using in each trade that you are conducting? Hopefully it's a very small percentage compared to your overall holdings in cryptocurrency in general. I mean, in general, you should have an investing portfolio and a trading portfolio just to limit the losses that you can take on. But breaking that down even further, how much capital are you going to be using in the actual trade that you're executing? Tip number 6, how much profit are you looking to get from the trade you are about to enter? What is your exit point? What is your expectations? And when that percentage shows itself, when you're hitting the profit that you were expecting to see from that trade, will you exit that trade, or will greed get the better of you and you will wait and see what happens? Will you exit the trade completely, or will you keep some capital in that trade to see what happens in the longer term? This should be determined in your trading plan before time. Tip number 7, where or will you will you set up stop losses along the way to prevent yourself from realizing losses with your trade? Let's say the trade goes south. Will your stop loss get hit? You set up a stop loss despite the fact that you're entering a trade thinking the price is going to go up, but you put a stop loss in to protect yourself in case it goes the reverse. So at what levels are you entering your stop losses, and are you okay with that? Tip number 8, when will you walk away from a trade that has gone south? You didn't set up a stop loss and you've lost money. Are you okay with cutting and running and just cutting your losses and exiting that trade? Do you have a backup plan for that trade of when is the best time to exit? How long are you willing to wait for it? Be careful here, because depending on how you approach this scenario is probably going to determine how much money you lose in that scenario. Basically, you got to ask yourself, can you walk away? Can you cut your losses? Maybe step away from trading for the day. Again, try to get that mental clarity again, and then re-enter with a better plan and with a fresher mindset. Last tip here, this is number 9. I know I said 10 at the beginning. I kind of combined 2 of these in one. But number 9 here is, what will you do with the profits? Are you the kind of, your profit taking strategy? Are you going to lock these profits into a stable coin? Maybe you'll farm that stable coin, get even more profits from it. Maybe you're just waiting and it's going to be your dry powder for the next time you see a good buying opportunity for the long term. Are you just going to lock your profits away into Bitcoin and hold that for the long term, maybe never selling that Bitcoin? This is something definitely to pay attention to, because sometimes people can see a lot more profit than they expect. Maybe they're not prepared for it. So this is your time to prepare. So I hope that these tips help you formulate your own trading plan and help you stay in line with yourself and with your own guidelines to help you be as advantageous, and also try to prevent as many losses as possible. With day trading, it's a guarantee you're going to take on losses. So the sooner you can come to terms with that, the sooner you can make better decisions in that moment. That's going to wrap it up for today's episode. If you guys enjoyed this series on how to trade cryptocurrencies, if you're a beginner and you're finding this very helpful, I appreciate it if you let me know in the comment section, and also if you hit the like button, it'll let me know that you guys like this video too. If you haven't already subscribed, I suggest you do that, because I'm pumping these videos out every day, and hit the bell notification so you can know when. But that's going to wrap it up today. Thank you, everyone. See you soon.